75 साल होने वाले हैं हमें आजादी मिले हुए, पर कुछ चीजें ऐसी हैं जिनसे हम आज तक आजाद नहीं हुए। जैसे सरकारी दफ्तरों की मनमानी से। इन दफ्तरों में खूब धक्के खाए, चक्कर काटे, सिफारिशें लगवाएं, कल आना परसों आना, चलता ही रहा। पर अब इनसे आजादी मिलेगी, अब ये सब नहीं चलेगा। दिल्ली के सीएम अरविंद केजरीवाल ने लगा दिया है आरटीओ के ऑफिस पर ताला। अब आप कल और परसों नहीं, बल्कि अभी से आरटीओ से जुड़े सारे काम जैसे लर्नर्स लाइसेंस, ड्राइविंग लाइसेंस रिन्यूअल, आरसी ट्रांसफर, डुप्लीकेट आरसी और आरटीओ की सभी सुविधाओं के लिए बस www.transport.delhi.gov.in पर लॉगिन करें या 1076 पर कॉल कर घर बैठे अपने डॉक्यूमेंट्स पाएं।
नमस्कार, मैं आपकी क्या सहायता कर सकती हूँ?
ड्राइविंग लाइसेंस के लिए आपको
75वें स्वतंत्रता दिवस से आरटीओ की सब परेशानियों से दिल्ली को आजादी, क्योंकि आरटीओ की सभी सेवाएं अब घर बैठे पाएं।
Now get your investments double. Yes, double in 84 months with Muthoot Mini NCD. Avail scheme where you can get up to 10% per annum interest for your investment. Investors should carefully read the prospectus dated August 13, 2021 and refer to risk factors on page 15 before making an investment decision.
आओ बच्चों तुम्हें सिखाए भाषा स्वाभिमान की।
आत्मनिर्भर बनेगा भारत, बात होगी शान की। आत्मनिर्भर हम, आत्मनिर्भर हम।
बच्चों, मैं भी आत्मनिर्भर बनूंगी, पर कैसे?
लोहा तांबा खनिज मिले सब इस धरती के आंगन में। इतना आशीर्वाद छुपा है इस धरती के कण कण में। हर एक जरूरत अपनी खुद ही जब पूरी कर पाएंगे,
आत्मनिर्भर भारत की हम तब बुनियाद बनाएंगे। आत्मनिर्भर हम।
संकल्प है हमारा कि धरती की ये आशीर्वाद हम देश की सेवा में ला सकें, देश की जरूरतों के लिए, एक आत्मनिर्भर भारत के लिए। वेदांता।
A faster and smarter world. Bomb World by Bank of Baroda.
What the world needs now is people who see energy a little bit differently. Because seeing a more sustainable world isn't far in the future. We're building it now. GE, building a world that works.
आजकल मार्केट में रिटर्न्स अच्छे मिल रहे हैं,
पर इक्विटी में रिस्क ज्यादा है। डेट में स्टेबिलिटी तो है, पर रिटर्न्स का क्या?
ये टेंशन फ्री है क्योंकि इन्होंने SBI बैलेंस एडवांटेज फंड में इन्वेस्ट किया है, जहां एक्सपर्ट्स सब संभाल लेंगे। हरी, NFO closes on 25th August. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
Welcome back. It's time to hit the query segment. Just a reminder, in case you are sitting at home and watching this on television, then there is a WhatsApp number that you can save it maybe as ET Now or ET Now Queries, and just send us your query. Do remember to send us your name, the stock that you're asking about, whether you've bought it or not, at what level you bought it, and the time horizon that you're looking at. So those will help us ask the right questions to the experts. We've got the first question. Oh, and by the way, a reminder to you, Gaurang, as well as Kunal, do keep your answers as short as you possibly can, because we've already got a lot of queries. The first one is for you, Gaurang. This is from K. Parthasarthi, who says he's a senior citizen from Chennai, and I will make an exception and take two stocks, whereas normally I don't. This is a question on New India Assurance, which was bought at levels of 190, and IDBI Bank that was bought at levels of 70. He says that it was bought long time back. He's a long-term investor. So what should he do?
So thank you, Alex. So despite of being a long-term investor, I don't think both these stocks have generated any kind of return, or even if they would have, I think it would be very much on the minimal side. And since you are retired, sir, my humble request is that look at fundamentally sound stock, buy quality, don't buy quantity. And if I have to advise him as an alternative investment idea, then two stocks which I think he can do an SIP also, and those are HDFC, AMC and IRCTC. I think on current levels or rallies, use upside to switch over to these two stocks.
This one is coming from Rohan Kumar, and he's saying that he has Sona Comstar. He got allocated during the IPO. He wants to understand what sort of a target price should he look at if he's looking to exit this stock. Gaurang, very new company. Will you be able to speak about Sona Comstar? How does the prospects look? Because I'm sure that Kunal wouldn't be able to basically talk more about Sona Comstar. So do you have any views on this counter?
Well, first, before giving the view, Cheryl, I think what question this investor should ask is how much he wants to make out of this investment in IPO. If I'm not mistaken, Cheryl, he got this shares in the IPO allotment and he's one of those lucky ones. From the IPO floor price to the level where it is trading at somewhere close to about 480. According to me, I think he would have made more than enough. This is a company from the auto ancillary space. The company was from one of the very well and strong managements with great credibility. But given the kind of returns that you are making, well, if you're not hungry for more, try to book profits at current levels or on rallies. And as an alternative investment idea, I think IT sector has been buzzing and that's where we have great conviction. As an alternative investment, I would suggest either HCL Tech or Tech Mahindra.
Okay, the next counter that we're speaking about, Kunal, this one's for you, is Subex. It's currently trading at 51.6. We've got Satish from Bengaluru who's asking about it. He's bought at levels of 63. He's got a 3-month perspective. Should he hold or exit at this point?
I think he should exit. The stock had a fantastic run, 14-15 months, where the stock from single digits went up to as much as 70-72. So I think unfortunately the viewer seems to have bought at the peak of the price rally, and now we are into a state where the mid caps and small caps could underperform significantly the large cap names. So I would suggest in that aspect that you should exit the stock and look at large cap names. Whether you look at banking stocks like HDFC Bank, I think that could be a good alternative at current levels, or maybe even an SBI, which has come back almost 10% lower from its previous highs.
Okay, this one is coming from Vimla George, who wants to know which stock is a better one to buy at current levels, Kaplan Point or Killpest India. Kunal, do you track Killpest in India, and between Killpest India and Kaplan Point, which one is better one for Vimla to look at?
Well, I don't track the latter, Killpest India, but I think for Kaplan Point, I think it's a very good chart. Long-term wise, many of these stocks have a tendency of going through periodic consolidation. So at times the consolidations could last for a couple of weeks, sometimes couple of months. But for Kaplan Point, for example, the consolidation has lasted for the last 3 years, from 2017-18, where the stock made a high just around this 800 odd mark, 800, 850. From there you saw a deep consolidation coming out for the stock, and now it's confirmed a breakout of that consolidation. So I believe it's a very strong stock, gone through that phase of maturity, and now inching towards a strong breakout in the longer term time frame chart. So I think out of the two, since I don't track the other one, I would definitely recommend Kaplan Point. I think that should be a candidate for hold, specifically if you're a long term investor.
Okay, we've got the next one coming in from Natarajan from Abu Dhabi, quite a way off. He's got a long-term time frame. He's holding on to a IOC, 1,000 shares bought at levels of 150. Gaurang, should he hold on?
So I think the recent uptick in the crude oil prices and the inventory gains have thrown more positivity and in terms of earnings, improvement. So we are positive on all the three oil marketing companies, IOC, HPCL, BPCL, and along with that, Alex, they have a good dividend payout track record as well.
Okay, this one is coming from Rajat, and he has M&M Finance. He's holding about 100 shares. which he's purchased at 153 rupees per share. He's holding it since May. He's saying that particular counter is seeing sideways movement for a while. So he wants to know what should he do. Should he continue to hold on to M&M Finance or go ahead and exit? And if you say hold, Kunal, he wants to know what sort of a time frame should he look at for holding M&M Finance.
I think it's a classical stock, M&M Finance. It had a fantastic run a couple of quarters back, where the stock moved up from the March 2020 lows. It moved up from 80 odd levels to 200, 220 odd range, and from there it's somehow gone through a corrective phase. Now, typically, I think these are good levels where you can start nibbling in. One of the reasons for that, I believe, is on the daily charts, where you see for the first time signs of bullish RSI divergence. Technical term, but then it indicates that a bottom formation is in process for M&M Finance at current levels. You look at the bounce as well from the very recent lows. I think yesterday or day before, it's almost like a 10% bounce on a very immediate basis. So that also indicates that there is a certain demand which is creeping up. So the risk reward is strong at current levels, and if you are looking at it, say for the next 3 months plus kind of a time horizon, I would place a target of almost 165 to 170 for M&M Finance. But the more longer you can hold, the more probability is that the stock can get back to its trending mode and even break past about the 200 levels.
All right. We've got the next question coming in from Satish. We've already taken Satish's question. Shubha is asking a question. Okay, so this is an interesting question, Kunal. I'll come to you on this one. There are several stocks that are trading at their 52-week highs or all-time highs. Which tech stocks can be invested in, considering that they are all of them, quite a few of them, at relatively high points?
Oh, it's a very nice and I would say a pertinent question, Alex, because what happens is typically when these stocks are at the thick of momentum and momentum comes to a point where you are not left with too many choices as compared to the other relative sectors. Only the stocks in the sectors which tend to keep on making new highs for themselves, they are the ones which tend to find a lot of attraction. So it's natural that the viewer is getting glued towards these kind of names. But then I would sense that it's a phase of the market where the moment you see many of these high risk sectors like the banking and metals, etc., or real estate, etc., if these stocks in auto, for example, if these stocks manage to go back into a strong resurrection mode, you would eventually see these IT names as well going through a profit booking mode. So I would sense that if you're looking to buy these stocks, wait for a sizable correction. These stocks have a tendency of giving you those odd corrections in between. The time when you least expect them to correct is the time when you will see these stocks correcting by 5%, 10% odd, depending on the kind of market cap you're looking at. So I would suggest that you can have few stocks in handy, something like Wipro, which I've been recommending quite regularly over the last many quarters. I think that stock looks extremely strong. Tech Mahindra has been the new stock or fresh breakout stock post that 1100, 1150 breakout, which had happened I think a month back for the stock. So these could be two candidates which you can look at specifically from a long-term view. But as I said, don't look at buying all chunk or the entire chunk at current levels. Wait for corrections to average out.
Okay, this one is coming from Sudeep, and he's saying he has Glenmark Pharma he's not given the quantity of shares, which he's purchased at 685 rupees per share. He's saying that the stock has dipped from 700 levels to around 500 levels. He wants to know, is there any issue with the management, and if not, can he look at this opportunity to average the counter further? Gaurang, fundamentally, everything right with the Glenmark Pharma. If someone is holding on to it, does it make sense to continue to hold on to it, repose faith in the counter, and make sense to buy on dips?
So Cheryl, our view at Geojit is that this sector will continue to hog the limelight and will see interest of smart long-term investors whenever the opportunity rises in terms of lower moves or correction. Glenmark happens to be the company that is in our long-term coverage. There were certain delays in terms of product launches and certain news flows created an overhang on the counter, but all those now seems to be past history, and the management commentary remains extremely strong in terms of robust outlook and new product launches. Use these corrections to add to the stocks, but thereby you will bring down your acquisition price, and long term stay invested.
Okay, and now this is a question that we've received even yesterday, if I'm not mistaken. Priya from Bengaluru, and this one's for you, Gaurang. It's more of a procedural question. She's holding Equitas holding at levels of 102. That's her average acquisition price. She's holding 100 shares, and based on the ratio that was decided in the reverse merger, she's going to get about 250 shares of Equitas Small Finance Bank. She's wondering what level she's going to get those shares at, and it obviously doesn't work like that. She's gotten it on the basis of the ratio that was determined on the record date. But I'll take this question to you anyway. What happens to the merged entity? And as I understand it, 1st of November is when that will happen. Would you hold on to the merged entity? Is this a positive for the company?
This space looks extremely attractive and promising. That is MFC microfinance companies. But unfortunately, the stock selection that she's made is not right according to us. We remain extremely strong. We remain extremely positive, Alex, on two names. One is AU Small Finance, and the second one is Credit Access Grameen. If opportunity does come your way, ma'am, then I would request you to make a switch to these two companies.
Okay, this query is coming from Kaustubh. He wants a fundamental view on Ashok Leyland for the longer term. Gaurang, what's the view on Ashok Leyland? Sharp rise this particular counter has seen. Do you think some more steam is left? Fundamentally makes sense to invest for the longer term?
Of steam, and I think the turbo engine is just getting charged up, Cheryl. This is one of the plays in the auto pack which is solely commercial play, and in all the segments they have introduced new products, and that's seen tremendous traction in terms of demand from consumers and increasing market share. A scrappage policy will again throw in tremendous amount of positivity with the kind of replacement run rate that you will witness going forward from here on. Stay invested. Our targets are somewhere close to about 145 to 160. These are long-term targets, so you need to have at least 1.5 to 2 year time horizon. And whenever opportunity arises, I think dips should be used as adding on to the stock or making fresh investments.
Okay, the next one is from the pharma space. We've got Lester De Cruz from Chennai writing in. This one's for you, Kunal. He's got 500 shares of Biocon at an average price of 383. He's wondering, after the recent correction, would you add? And I think you've spoken about this in the recent past. It's not a great idea to catch a falling knife, if I'm not mistaken. That is your view.
So I maintain that view that it's very difficult to try and time these stocks in terms of specific bottoms. So typically, when a stock tends to underperform, the underperform lasts for a longer duration of time. And for Biocon, actually, it's not the start that it's not as if the downtrend had started just recently. The downtrend actually had started off in the month of January, February, when the stock had shown a single day cut of 10-12% odd, if I'm not wrong, where it had fallen down from 450, 470 levels to almost 400 or sub 400 on that single day. So I think that was the starting point of the downtrend for Biocon, and it's now just gone into a prolonged kind of a move on the downside. Now, for such kind of names, it's very difficult to preempt when would the turnaround happen. So I think purely on that aspect, I would suggest that you should use rallies like what you saw, for example, yesterday as good opportunities where you can look to exit the stock and come back to mainstream large cap pharma names. I think Sun Pharma, Cipla, they look very attractive at current levels. So I would recommend a switch.
This query is coming in from Mintu. He had also written to us yesterday, was not able to take it due to time limits. So Mintu is asking that he has 20 shares of On Mobile, which is purchased at 148 rupees per share. He wants to know how the stock looks. He wants to hold it for the next 6 to 8 months. Kunal, on the charts, On Mobile Global, how does it look?
I would suggest to try and book out profits over here, depending, of course, on where your cost prices. The stock has had a fantastic run, like many of these other mid caps and small caps. This stock as well is going through a correction. So far this month, the correction is 16%, and look at it, that the stock is still up almost 20% or 25% above its 200-day moving average. So even from current levels, there is a scope that before it actually completes a retracement, it can drop by another 20-25% before it finds a lot of stability in terms of moving averages and other indicators. So I would suggest that it's prudent enough to try and book out profits and then wait for the stock to come back to sub 100 levels. 96, 97 is where the crucial support is for On Mobile. I think that could be a good re-entry point for you.
Okay, I just want to remind our viewers, Hari, you just sent us a message, if I'm not mistaken. Do ask just one stock because it's difficult to take more. I'm going to take a question on Hindustan Aeronautics, and this one has come in a little bit earlier. I'm going to take this one to you, Gaurang. This is from Satya. He's holding on, or rather he's asking, is this a good level to get into the stock? And he's asking whether, apologies, this is a short-term query. Kunal, I'm going to come to you on this one. He says that it has given a breakout above 1,200 after a year. Is it a good time to enter with a short-term target of 1,450? Kunal.
Yes, I think it's a good breakout. I was actually looking at the charts for this stock yesterday as well, where it was coming out of that marginal consolidation. I think over the last 1 or 2 weeks, this was a consolidation which was going on for Hindustan Aeronautics. The best part about the chart, which I liked, was the chunk of volumes, because it was not as if that yesterday or day before the volumes had started to increase up higher. There was a consistent buying of volumes for the stock almost a week prior, and so the stock was sort of setting up for a breakout, and the breakout has finally happened today for the stock. So seems to be a good breakout. The next level of targets of this consolidation breakout comes closer to 1350, 1360 odd mark. So that should be an upside of almost 130, 140 rupees from current levels. So could be a good trade, specifically from a short-term view.
Okay, this one is coming from Anuradha, and this is specifically on Cochin Shipyard. She's bought this at an average price of 306 rupees around the IPO, also added some more stocks at that kind of a price, saying that this hasn't actually spiked compared to other defense companies like BEL or even HAL. So she wants to know whether she should average or sell or actually book loss or hold. What's the or hold rather? So what's the take here, Gaurang? Cochin Shipyard, if someone's invested, does it make sense to stay put with this holding? Fundamentally looks good over the longer term.
FDI in defense, I think there is tremendous amount of interest, and not only for Cochin Shipyard but for likes of HAL that was just discussed a while back, Bharat Dynamics, BEL. Anything that is associated, any company which is associated with defense, I think you need to have at least 2.5, 3 year plus or maybe more, because it takes that much time to make a prototype, get approval, and then mass scale production. More importantly, Cochin Shipyard, well, it is not in that league, but somewhere similar to the defense story with its services that it caters to the Indian Navy. And it has got one of the best dry dock facilities, or the largest dry dock facilities in this part of the world. So we have really been positive on Cochin Shipyard. Give it some more time. I'm quite sure with the order book going up and the execution capabilities and capacities in place, earnings should improve going forward.
Gaurang, a very, very quick view. Infosys now passed the $100 billion mark. Sriniket from Hyderabad asking, is it still good to accumulate at these levels?
For many more years, so go ahead and buy it. A short answer.
Then one more short answer. We've got Chinna who is asking about Sharda Crop Chem. Bought at levels of 362. The stock has fallen dramatically. Would you suggest that he can still hold on for the long term?
Cover the stock was at an alternative investment idea. I think mid-cap IT and a Mindtree or a L&T Technologies would be a preferred bet.
All right, with that now we will actually switch to the rapid fire segment of the show with Kunal and Gaurang. As you know, you need to give really short answers, buy, sell, hold or avoid, and a small rationale if you want to. Let me begin with this one from Michael George. He wants to know, is it advisable to sell Deepak Nitrate at current levels and re-enter at lower level when the market corrects? Kunal, what's your take?
I would suggest to keep on holding at current levels.
Gaurang, this is for you. Shivji is asking about Affle India long term, already bought at levels of 2,200. Would you buy more or hold?
Well, you can continue to hold, but as an alternative investment idea, Infosys, TCS, HCL Tech or Tech Mahindra would be preferred destination.
Okay, we have from Thomas George on Zomato, 1,000 shares already purchased, bought at 131 rupees per share. What to do, Gaurang?
So we had subscribed during the IPO. We continue to maintain the same because of the anchor investment date coming through. You had the pressure, the stock has recovered. Hold on and add on this.
Gaurav, a slightly difficult question. HDFC Life, Himanshu is bought at IPO level. Can it reach 10,000 in 10 years? I don't know, but would you suggest holding for the long term?
You don't make life easy, do you, Alex? Difficult ones are always there for me. So yeah, I mean, we remain positive and in fact, as I mentioned earlier, do an SIP in HDFC Limited, HDFC Bank, HDFC Life, HDFC AMC. With a 10-year time horizon, I think you should be laughing your way to the bank.
This one is from Deepak. He wants to know whether it's good time to buy Dr. Reddy's Canal.
Well, I would say that it's a good time to try and chip into large cap names. Whenever you see a bad news coming across this, and especially for a large cap name which has fallen by 20%, should be a good buying rate.
Kunal, back to you. Sale bought at levels of 133. Would you hold on for a little bit more than a year? And would you also be able to suggest a stop loss?
Keep it as a very short-term trade. Suggesting a stop loss around 115 mark, but I would sense that sale would probably take more time to try and break past above 130 yet again. The stock should consolidate, so I would suggest keep on trading and try to lower your cost price as much as you can.
Gentlemen, on that note, it's a wrap on this edition of the query segment. I'm going to take this, Cheryl. So on that note, it's a wrap on this edition of the query segment. Thanks so much for taking the time and for answering all the queries that you did answer. To all the viewers who've written in on social media as well as on WhatsApp and who didn't get their queries answered, do have patience. We take as many as we possibly can, and hopefully the answers that were given today are also beneficial to you as well. Take a look at the high risk and low risk ideas that our experts have shared with us as we head into this short break. We'll be back on the other side with a lot more.